Hi everybody, Expert4x here from Expert4x, and in today's video I'm going to review the settings for our new Expert4x Hedged EA. And on your screen you can see the settings that we will be talking about. Now this video is actually part of a whole string of videos that I've made in the build up to the launch of this particular EA. I would sincerely encourage you to go and have a look at these videos because they explain so much more about how the EA works than I can explain in this short video. So here it is, a sneak peek of the Hedged EA. Go and have a look at it. There is the link, a clickable link will be in the description of the video as well as in the first comment of the video. Then one of the settings we're going to be talking about covers the magic moving average. Again, that was separately covered in a recent video, and there it is. Please go and have a look at that if you want more information about the magic moving average. And the beauty of the moving average, it captures trends beautifully. The EA uses the profit recovery strategy, and this video, again produced a short while ago, tells you how the profit recovery strategy works. Again, I can't go into a lot of detail in this short video, but please go and watch that particular video. And then here's an interesting video where basically we have traded the new video up to $1 million, and we compared the new EA with the McLaren. There's a subtle warning in this video that says don't buy the robot and try and drive it like a McLaren from day one. Start nice and slowly, and we'll go through the settings, and you don't need to use all of the turbocharged settings all at once. You can do them systematically to get to know the EA a little bit better. Okay, so let's get into the settings, and here's number one, and it's the MA. So the EA basically uses the moving average that is offset or shifted by a certain amount to determine whether the market is in a buy phase or in a sell phase, and that is how it determines the direction of trend. Now, when the initial transaction does not reach its targets and it starts going negative, then we top that initial trade up in the same direction that the initial one was at certain price levels, and those price levels are very similar to grid trading, and we talk about the differences between the first price level and the second price level as a gap. These settings determine how big your grid top-up process will be, whether you're using very small top-ups or very large ones. The larger they are, the lower the risk. The smaller they are, the bigger the risk. Then we have the top-up multiplier. Now, this is the one that says that when a transaction starts going negative, the next transaction, how big must the lot size be? Now, you could put that as 1, for instance. So if your initial trade was 1 lot, then the next trade would be 1 lot, and the next one after that 1 lot. But if you want to recover faster, you would say, okay, let's make it 1.2, like in this particular setting, 1.2, or let's make it 1.4, and so on and so on. And in fact, if you make this setting 2, then you have true martingale principles applying. You can trade martingale if you like that approach. Then you can use the setting to trade martingale, but you don't need to. You can trade very conservatively and only increase it by 1.1 or 1.2 or so on. The very important setting here, because this determines how quickly you recover your negative trades. Then here's a setting here called the skip setting. That's also covered in another video. You can just find that video by entering skip in the YouTube search function. Just enter skip Expert4x and you'll find the skip function explained quite nicely. Basically what it is that instead of topping up on every grid level, you can skip some of the grid levels, and that is also a way of reducing risk. Now here's a unique setting that we haven't had in any of our previous videos, and that is it's basically an equity adjustment setting, where the EA automatically adjusts your settings for the equity balance that occurs in your account. So for instance, let's say you started with a $10,000 equity balance, and let's say you doubled that. So then what you can say to tell the EA to do is you could say, if my account doubles, then increase the lot sizing by a certain amount. That's basically what this setting does. And the reason why we brought that in is that the percentage of equity setting that are in other EAs is very dangerous and ineffective. But if you do it in jumps, like a 50% gain or 100% gain, it is way more efficient. So this is a way of turbo boosting your gains, because your lot sizing increases and you therefore gain more. Okay, then let's have a look. This is the easiest one. This is the profit on your initial transaction. So let's say you enter a euro and you're entering it for a buy. When that transaction goes up by 20 pips, it will cash in, and that is basically your initial trade profit. But if it goes negative and it starts opening top-up trades, then it creates a basket of trades, and that's why we call it basket of trade management. And then you have to tell it when you want to close that basket of trade. So what will happen is the basket of trade will develop, and then some will go positive and some will go negative, and at some point you'll be breaking even, or you'll be making a profit. So these settings say close the basket of trades when the profit is $40, or close the basket of trades when the value is 6 pips up. So this is for closing your basket of trades. So the only two ways that this EA closes trades, it's either it hits the initial profit or it closes the basket of open trades. As simple as that. Then we have here the maximum traded pairs. A pair is a cross. So like the Euro USD is a cross or a pair. Further down we have maximum currency exposure. So a currency is one currency, so it's a euro or a pound or something like that. Now these two together are fantastic, because if you put in a setting of 4 and you put 1 in for the maximum currency exposure, it means the EA will never open currency pairs where the currency appears twice. Now just to give you an idea of this, here's an example where here are 4 transactions, but you'll see the same currency does not repeat itself. So you'd have the pound USD, the euro yen, Aussie franc, and the New Zealand CAD. None of these currencies repeat themselves. So it's a way of reducing risk tremendously, because the USD can be a very strong trending currency. The yen can also be a very strong currency. So you don't want to be overexposed to those type of currencies, or at some stage even the pound can start trending. So by creating a portfolio of open trades where they are independent of each other, you can reduce risk tremendously. Okay, so far we have covered a whole lot of settings, but none of them tell you anything about hedging. And this is a hedging EA. And the reason for that is that the hedging element is hard-coded into the robot. It has the logic is in the robot, and essentially how it works is that you have a set of transactions that develop. If a basket of negative trades gets created, that basket is called a distressed basket of trades. At that point, there will be an automatic hedge that occurs. So it won't be a full hedge. It will be determined by the setting I'm going to show you. But essentially, a hedge will be created in the opposite direction. So you'll have the initial trade going negative, but you'll have a hedge transaction against those negative trades. So what will happen, sometimes the hedge transaction starts going positive and starts cashing in, and will continue to cash in as long as there's a distressed group of trades. And sometimes the distressed group of trades cash in positively, and then the hedged group become the distressed group of trades. Now you have to go and watch that video that I showed you earlier in the in this particular video to see this happening in real trading, because we actually show you how this happens on the charts. So that is how the hedging works, and that's built in, and that's why you don't see any settings regarding hedging. So there's only one hedging setting, and the hedging setting is here: hedge lots multiplier. In other words, a booster. So what it's saying is that when it opens a hedging trade, should it open the hedging trade at the initial lot size? Like in this particular case, the initial trade entry is 0.1. It will open it at 0.1. Or do you want it to actually open a lot bigger? So you can actually say, no, like in this case, it's 2, so it will open 0.2 lots. So you get a much quicker hedging impact. You can even go 3 or 4. So you can decide how much hedging you want to do. Sometimes you want to over hedge, or sometimes you want to under hedge. But that is the setting where you tell the EA to either, if that's a 1, it will just create hedges using the lot size of the initial trade. If it is higher, it will multiply that particular initial lot size and give you a better hedge, as it were. Now there are 3 turbo boosted settings here, and the turbo boosted setting is this top up lot multiplier. You can turbo boost your income by playing around with that setting. If you bring it, even take it to 2, you're going to be making a lot of money, but your risk will increase. Then this equity adjustment setting, again, that's a turbo boosted setting, because you will increase your gains because you have made enough gains to justify an adjustment to your lot sizing, and the EA will do that adjustment for you automatically. It'll adjust all the items that need to be adjusted. So there's a turbo boosted one. And then this last one is the hedged lot multiplier. That is also a turbo booster. You can really impact your results tremendously by playing around with that one. So the EA is likely to be launched next week, and so far we have produced a number of videos that explain more and more about this particular EA. So please watch those videos so that you're ready to appreciate what this new Expert4x Hedged EA does. So from me, Alex Deploy, cheerio.